Hello guys, good morning. We are gonna hit this off in a few minutes. Hello guys, good morning and welcome to this live session of the Artist Academy. Today we are gonna go over the market on a technical perspective and on a fundamental perspective, just to take a look at where price is at the moment and where we could be headed in the future. It is the first time I'm going live for the Artist Academy on YouTube, so cut me some slack if some technical difficulties should pop up that I have to fix. But I guess for now everything is in order and is in place. Okay, so let's hit this off. The first thing that I always do when I hop on the charts is just looking at where price is overall. What I always have is ranges. So I like to use a lot with ranges, as I believe that when price goes up, it goes up the stairwell. I say it like that, so it makes a higher high and a higher low, and it's very systematic. And it likes to do that on the short-term trend, but it also likes to do that on the longer-term trend. So with all the events that are happening, we can see that we have some choppy price action, but in the end of the day, technical and fundamental, they will align. And as a trader, it's more important to wait for the good setup, for the good timing, I would say it like that, where price is gonna meet your target entry or your target profit level. And it's 80% weighting. Okay, so it's 20% that we do the entry, and it's 80% waiting and actually just waiting what price is gonna do. So as always, we are gonna hit this off with the most important one, which is the dollar. So we can go to DXY here. We have some important levels where we have come towards. We can see that with the dollar and the risk on sentiment becoming more real with the delta variant, we have seen some nice impulses with the dollar towards the upside. So for now, the question is gonna be, how is the delta variant gonna develop? Okay, and that's gonna be really important for the very simple reason that whenever we are in the markets, we have two types of sentiment that can steer those markets, okay? And that is beside the monetary policy of that particular country, I would say it like that. So let's say that we talk about the pound. Well, how the central bank of the UK is gonna arrange their monetary policy, that is gonna influence the currencies, okay? But beside of that, we have a risk-on sentiment, which is important, and we have a risk-off sentiment. And that's something that you will see in the markets. Those two types of sentiment, they come with certain types of movement within those currencies. And the only way I like to trade is when the sentiment is in line with the movement in the market. Okay, so the risk-on sentiment comes down to the fact that people are happy and they are willing to invest. And what we will see compared to that is that the US dollar should become weaker with a risk-on sentiment. So the US dollar should become weaker. So in that particular sentiment, we are going to go with XXX USD buy opportunities that we will be looking for. Okay, the USD is a safe haven. So I'm going to write that here, safe haven behavior. And the reason that I'm saying this is because if we are making setups, we need a very good fundamental view of what we are looking for. Are we looking for buy setups? Are we looking for sell setups? And we know that trend reversals happen 20% of the time, and 80% of the time it's just trend continuation. So for that trend to actually change, we should need some fundamental input, okay? Something should change in the way that they make decisions, or something that is happening in the world to actually change that. And then actually we can see that reversal and start trading that, okay? So when people are happy, they are willing to invest, they are willing to invest in stocks, and what we will see is that the safe haven behavior is gonna come into play. So what are those safe havens? Safe havens are the US dollar, the Swiss franc, the Japanese yen, and gold, which I'm gonna place in parentheses right now, between parentheses, as gold has been reacting a little bit differently and out of line with how it should behave. Excuse me, with how it should behave. So with that being said, safe havens are gonna get weaker whenever we are in risk-on sentiment. Okay, so that means XXX USD buy opportunities. We can start looking for XXX CHF buy opportunities. We can look for XXX JPY buy opportunities. That's basically the first thing that I'm looking for if I see that the stocks are flying. So how can we see that the risk-on sentiment is there? Basically, if you take a look at just the bigger indexes, if you take a look at US 30 and you see it's sky high, okay, I have some bigger ranges here for US 30. Should the delta variant be fixed, that we can see a possible continuation. This is just theoretical, doesn't mean that we are going to get there, but we are holding up to the range right now. And that would mean risk-on sentiment. So I'm going to erase this arrow because it's giving a wrong interpretation of what I'm expecting. But basically, if this thing is able to shoot back towards the upside, then we should potentially get here, and that means a weaker US dollar once again. So for the US 30, you can take a look at the NASDAQ, which is also a great index, to just see where we are, and we can see that the NASDAQ is sky high. So that risk-on sentiment is there. So that also means when the DXY got to these important levels here towards the upside, that we could have expected another drop towards the downside, as we can see that investors are not willing to let go of that risk-on sentiment for now. What is the big threat for the risk-on sentiment is that big fundamental changes coming. Okay, so big fundamental changes. And I'm going to go to the analysis later on. But one big fundamental change that is happening right now is that they are printing a massive amount of money every single month. Okay, and that is going to be about $120 billion that they are printing. So the risk here is that the dollar could devalue based on the massive supply that is being created. I hope everything is okay. I'm just going to take a look. Okay, I hope everything is okay with the stream that everybody can see this and everybody can hear me good. Okay, so the big fundamental changes that have been happening is that they are printing a massive amount, okay? And on plus, Biden is looking to print another amount that is about equal to the last QE. So quantitative easing, which basically means that they are going to print the money. So President Biden is looking to print another, I think, $6.5 trillion to stimulate the economy, to maintain the economy, and to make sure that the economy is being held up in price. So the big fundamental change here is, what is this going to do to inflation? Okay, because inflation is a very, very big factor within the markets, which means that if inflation is getting too high, then they will start to work on the interest rates. And when the interest rates start changing, then that could be a reason for the dollar to get stronger, because more interest on the bank means that more people will place their money from a risk environment, which is the stock market. Okay, they will pull the money away from that risk environment and they will place it on a bank account, which is giving them a secure risk-free interest. So, or a secure risk-free return, I'm going to say it like that. Okay, so what is this going to do to inflation? Well, the inflation currently is, I think it's at about 4.5%, something like that. So that means it's high. The average they like to maintain, and with they, I mean the central bank, is about 2%. So the inflation is already too high, and that is a very big fundamental debate that has been happening with what is the central bank going to do? Are they going to leave those interest rates so low because the inflation is already 4.5%? And you can see that in prices rising. If we take a look at the goods and services that we buy from the store, we can see that we are paying 5% more. So basically it means that our money is becoming worth less. Okay, so working on that inflation and interest rates is basically, I call it a manner to rob the people, because they are robbing them from their purchasing power. Okay, and you can see that the US dollar, since they started printing and since the vaccinations. Okay, so this is about where they started talking about vaccines for the coronavirus. Well, take a look at that. The dollar dropped from this high to this low about 11%. So that means if you are an American citizen, at that point, your money is worth 11% less. Okay, which is quite a big difference if you were an American citizen, but it was to be expected just for this. Okay, the risk on sentiment came back. Whenever this started going down, we can take a look at US 30, what the Dow Jones did. It's just started going up. So from this point here, we didn't see a downtrend anymore. We started a very nice uptrend on the stair. You can clearly see that those levels are getting respected. Okay, and we have been going up ever since. So what is the big fundamental threat right now is the Delta variant. It's basically here. The big fundamental threat is the Delta variant of COVID. And for the very simple reason that the experts, and I'm going to say experts between parentheses here because we don't know who the experts are anymore. The experts said the vaccine is going to work. Right now it doesn't work anymore. So the experts say that the current vaccine for corona is not sustainable to contain the Delta variant. So what could this possibly cause is, should this create a problem for the investors in a fearful way, then we could see safe havens get stronger, okay? Because the Delta variant, if it gets too big, let's say it like that, could we have a possible other lockdown? Because with the lockdown, business is going down. Okay, and if that business is going down, that means less profits. Less profits means less value of the stock. So that means people are going to start selling their stocks. If people, or if businesses, if they have less business, they will pay their shareholders less money because they just don't have the profit. So that means the dividends are going to go down And then the question is a stockholder or a shareholder still willing to hold that particular share for less dividend, or are they just going to sell it and wait for a better time to then again purchase it? Okay, so there is a lot of stuff that we can talk about and that we can think about. So the safe havens get stronger if that happens. What would that mean? That would mean that we would start looking for XXX USD sells. And that's basically what has been the trend for the weeks that have passed by until, so we are not going to calculate in last week, but we have seen XXX USD sells. We have seen XXX JPY sells. Okay, we have seen XXX CHF sell behavior. That's what we have seen. And that just means that people are shoving their money from particular assets back to those safe havens, but the market is on steroids. So that means it's not for a day, it's not for a week or for 2 weeks. It just happens very fast. It happens 2 days risk off sentiment, then we go back with 5 days risk on sentiment. Then it goes with 1 day risk off sentiment, again followed by 4 day risk on sentiment. So a lot of mixed signals are in the market, and it's very hard to interpret the market right now. So basically we have been shoving from that swing trading mentality to that day trading mentality, just for the very simple fact that so much is going on. We have inflation, we have Biden who wants to print, then we do have a booming stock market, so people don't want to miss it. They still want to be in, but then again, inflation is coming. So if that inflation is getting too high, they're going to start working on the interest rates. What is going to happen to the stock? So people are fearful, and that's why Robert Kiyosaki says it very beautifully. He says, the bull goes up the stair and the bear falls out the window. So that means if you have an uptrend, it's always going very smooth, okay, with higher highs and higher lows, and it's very systematical. But a sell-off is always falling out of the window. So that risk-off sentiment, most of the times, I mean, I have some doubts about whether the market can hold up these high prices for stocks just with the amount of printed money that is in it. It's basically the central bank that is upholding this entire stock market. But you need to ask yourself, is this sustainable? And the next thing is, are we in a risk on or a risk off environment? Okay, so just if we take a look, this is one I like GBP USD. We have been going up here from the start with Corona. We have seen those massive impulses towards the downside, and from that point, whenever we started our run towards the upside, okay, we can clearly see that we have been following a certain range. I use these Fibonacci ranges. I really like them for the very simple fact that you can see, here we go. Yes, it was like that. Okay, for the very simple fact that you can see that those levels are upheld. Here we go, there we go. Nice. Okay, so whenever we came to this level here, which is, as you can see, a very nice supportive zone, we swept those lows. So that basically means that people who were buying GBP USD on this important daily level, they were taken out, okay, with this one candle. It was just one candle. The day after we recovered, we closed back above and we started moving towards the upside again. So that could also mean that people who sold it from the highs here, which was this very nice supply zone, and also some sort of an order block where people said enough is enough for the bull, let's go back to the bear. We could see that a lot of those orders here were mitigated or were just processed, and then from that point we started to move towards the downside. Okay, how far did that move go? I always like to say it went back to the range, okay, or we just took the equally weighted move from the last impulse down, okay, which is basically the same distance. So if you take here this candle, I'm gonna zoom it in a little bit. Okay, so from this point here, we can clearly see that this was the last or the start of the impulse towards downside, so the last candle before we start moving down. Then from that point, we created a retracement, which is about 50% of the range here between this fib level and this fib level, and then we just created an equally weighted move towards the downside and the market stopped. Okay, so for those profit levels, I like to use that. A lot of times I just take distance 1, I place it down, and I'm like, okay, where do we get? Well, in this particular example, it was the down here of this range. The fact that it took a little bit longer to process the orders, okay, made us go below that range, take out those lows here, which was quite convenient probably for people who wanted to buy massive amounts of GBP USD. As from this point here, under this level, there were sell stops, which means people wanted to sell this market further towards the downside. So that created some sellers, and then if sellers are being created, that means that buyers have the opportunity to actually start buying it. Okay, so sell stops were here, and stop losses for the buyers were here as well. People who bought it at this double bottom took it back towards the upside. So with the students, I said, look, if we get here, this is gonna be a take profit level. Okay, it's gonna be a take profit level. And why is that? Because here the sentiment is mixed. Sentiment is mixed, which basically means that USD has no reason to complete his strength in one way. Okay, as I said, the market goes up and it goes down. And whenever we came to this level, we had the analysis that if the market is changing, we can go back towards the fib level. Okay, and we basically came there. What is a good sign for me? A good sign for me is always if you have here this resistance level, okay, that is being broken, and we sweep it above and we are in a downtrend, that's when I start looking at price action very carefully for possible continuation towards the downside. Okay, so I like these levels here a lot. And one of the things that I like to see is this is a decisive moment. And the price likes to push towards those levels on decisive moments when big news is going to come in. So for now, the market has to make a decision, right? The market is either going to say, hey, we are going to continue the wave for the US dollar, okay, which could basically say that we created a wave number 1, 2, 3, 4. This is just an accumulation, some sort of a rally, a base, and a rally. So a rally, a base, and a rally, that's a possibility, okay? Or this is the moment that we can say we are going to go towards the downside. Two factors with the pound and the dollar. The first one is the pound. Guess what? Today at 1 p.m., we have this very nice asset purchase facility. We have the monetary policy report, which is quite important. We have the MPC asset purchase facility vote and the monetary policy summary, okay? We have the bank rate votes and the official bank rate coming out, which is about to remain the same. GBP has been doing good and has been quite optimistic with the reopening of the economy. So this was a very nice wave that you could have caught on GBP USD. But for now, I am just very mindful that we could potentially do something like this. And that's what I would like. So I do believe that the market is not going to crash in the near future. I'm going to put it like this. But for now, what I would like to see, guys, for the pound dollar, okay, is just that we can hit this level, that we can make it back towards the downside, and that from that level, we could potentially start rallying up. Okay, that would be very, very nice, in my opinion, to just take another discount at this price to take it back up. What is important for me in this zone are two candles, okay? First one is this one, which means that basically if price should get back here, I would take a look, and I'm gonna just adapt here the style. Here we go. So I would take a look at this one, because this is where the orders were accumulated for the buy. And if you want to measure out how far price has gone back down, what a lot of people use is the Fibonacci measuring tool. So they place a Fibonacci. This is one wave towards the upside. They place it from the swing low, so from the bottom of the wave towards the upside of the wave. Okay. Me personally, I don't trade the 23 level, I don't trade the 38 level, nor the 50 level. I am not interested in that. For me, the real discount is starting from 62% from that level. Okay. So the first thing that is important for me is this one candle on the daily. You can see that we have a green candle, we have a black candle, which is a sell candle, and then we have buy, 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 buy. Okay, so that means that this candle is a little bit odd. People started to sell here. So for me, should we come back down? And this is with the news, we make an impulse towards the downside. This is zone number 1, where I will be looking for a potential upside back towards that fib level, should the pound be positive and should the sentiment remain positive. So that means that the pound could make a rally towards the downside, or the dollar could get stronger once again. Good. If that happens, then there are some possible correlation trades that we can take if they are in line. If we see US 30 moving down at that particular point, that's going to be interesting. That's going to be quite interesting if we can see that the stocks are selling off whilst the dollar is getting stronger. So that means the dollar is being supported by a sell-off in the stock. So that also means that pairs like Euro USD could be a potential sell. Pairs like GBP USD could be a potential sell. Okay, if we rally above this level, so back towards the upside, then we can actually target here this zone, which was the supply zone from this entire processing of buy and sell orders. So this was the last candle before the big drop. You can see here a doji being created. So this is the decision candle. And then we can see big down, full bearish engulfing candle. Again, full bearish engulfing candle. And again, full bearish engulfing candle. So for this particular moment, what I would do, and of course, this is with the news, so it very depends where we are within about 3 to 4 hours. But what I would love to see is for the market to remain at this level about, okay, you can just place something like this here, your stop loss, and then you can go for a potential sell if the market is gonna allow it. So that means when the news hits, and that's important. So should price be here when the news hits and we see bearish PA, we can take this sell setup down. So what I like to see a lot with sell setups is basically this. So we can see this is on a daily time frame. So if you zoom in, and we are going to do that in a minute, you will be able to see that the market is going to make higher highs and higher lows. Okay, at that particular point, we can see that there are important zones within that uptrend, which is here the high, and we have the higher low. We have again a higher high, and we have a higher low. Okay, what is an option for me when I'm trading and I'm looking for a possible reversal? Okay, because remember, the market is 80% continuation of the trend, and it is 20% reversal. Okay, so on the big ass time frame, I'm gonna say it like that. Okay, this is still just higher highs and higher lows. Okay, so a swing trader would say, okay, we are still going up. That's what a swing trader would say. A midterm trader would say, hey, we have a high, okay, here, 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 and here. So basically, we can start looking for a sell. That would be the midterm trader. The position trader is gonna say we are going up. The midterm trader is gonna say we go down. The short-term trader is gonna say, hey, we have an up, higher high, higher low, higher high, higher low. We are looking for a higher high. Okay, so that's the position you have to take for yourself. And I always say you have to pick a side. You have to pick a side, okay? Nobody knows where the market is gonna go. That doesn't exist. So all that we can do is use the odds of probability and market structure that comes with it. So that means if the market has been reacting on these levels, on these fib levels before, then as a trader, I am choosing to trade from those fib levels where we have seen the first reaction already. Okay, we are accumulating right now. And when the news pops, we can either make it towards the upside or towards the downside. What I would prefer, and this is a setup that I like to trade, is when the market is making those liquidity runs here. So you can see this level here, these double bottoms, we have swept it. Right now we have broken the first high. Okay, a friend that I'm trading with, he likes to call this the gas station. Okay, this is where they took gas. This is where they accumulated their orders. But from the start of the road trip that we made here, we can basically see that we haven't paid for our gas yet. So we have to come back to pay for gas, and that's either going to be on this level, the 62%, or that's going to be here on the 0.79%. So if this is, in my opinion, the continuation of an uptrend at a position standpoint, which is higher highs and higher lows, then for me the ideal price to get in, as we have had the confirmation that price was strong enough to break this lower high here, so we have a break of structure, should we come back towards this low at this point, that would give us a good discount price with a very nice risk to reward. So from the sell position to then take it into a swing position towards the upside. Okay, so this is going to be the first one that you can try. Over here, 62%. You take it a little bit below. You don't want to go too far with this one, and just manage your risk to about 0.5%, and then you can just take it back towards the upside here. Okay, that's a very nice possibility from this first demand zone. Should the market get lower and you take a loss, then you can try a second time here. So basically I would try all of them. If the market doesn't just purge towards the upside, okay, so if it doesn't purge towards the upside immediately, then this would be a great setup. So we have had liquidity run, okay, we have had the accumulation of orders, or the base of how this entire uptrend started. So then we can even start taking one from this level here, this black candle. Okay, so from that black candle, then I would put again a new order with the same amount of risk. So if you equal both with 0.5%, that would be 1% risk in total. And then we could take it back towards the upside again. Okay, so these are the possibilities that I would like to see, certainly with this GBP news coming up. Okay, but as we can see this on GBP USD happening, this nice little range. If we go, by example, to NZD USD, well, guess what? Look, this is a setup that we took with the students that we have. This was the previous one. It's still running. GBP USD went a little bit stronger, but yesterday with the good employment numbers of the Kiwi, so for New Zealand we had those amazing job results, then the market started pushing towards the upside, and this is in running profit, I would say it like that. So this is in running profit, where we are not really thinking about taking this out just yet. So we expect this to go a little bit higher. We do have some risk-free trades here, so that means that we are not allowing this price to get lower again, should it happen. But as you can see, the range that was created here before the last massive impulse towards the downside, we can see clearly that this range is being respected and that we were at those very critical levels as well. Okay, so for GBP USD, I'm expecting something like this. Market can push it up, okay, before the news, potentially, maybe even with the news, come to this point. But if we fail to really break this towards the upside, okay, then I will be aware of the fact that this could go down. Certainly if stocks, by example, US 30 or the S&P 500, that's a possibility as well. If you just go to the S&P 500 and you can see that this is starting to drop as well, well, the risk off sentiment is going to get there, and then the DXY could potentially get stronger. Okay, for now we want to see it drop a little bit because GBP USD can potentially just run back towards the upside. Here we go. On a smaller time frame, if you go to the 15-minute, good, we can clearly see that the market is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, on a smaller time frame perspective, just as we have had before, that's what I like to trade a lot, is imagine you have here a liquidity station, which means that they are creating a supportive zone, they push it down, we go up and we break this pivotal lower high. Okay, so then whenever the market comes back into a discount, which is about these levels here, these three, that's what I like. Okay, your stop is below the low here, then you can take it towards the upside. Well, how far can you take it? And that would have been a day trade. That's what I personally do. Okay, I would have done something like this because GBP USD has been running up. I would just take the equal distance. So this is wave number 1, and that is wave number 2, and this would be my take profit level, and just around that level, that's where the market is starting to stop. Okay, that's where the market stops. You can also use, if you guys like, the minus 0.27 FIB level, which is a good, I would call it, measurement for profit taking. As you can see here, this was straight on the minus 0.27 FIB. I like to use that. So if I just trade it for a higher high, then I'm gonna buy it at the discount level. I'm gonna trade it up for the equal distance, okay, equal distance, or just to the minus 0.27. That's also like that in a bigger trend. So if I trade a 4-hour trend, by example, and I expect a new high to be formed or a new low to be formed, all I'm doing is I'm just buying it, or buying it at discount or selling it at premium, okay, and then I'm moving up. So for GBP USD, this is gonna be a potential that I'm looking at, okay, trade it back towards the downside. Good. If we get to this level here, then we can start trading it back towards the upside. Should we break it, okay, then we take 0.5% loss. That's okay. That's not a problem. Or just the loss that you guys want. I mean, I'm not enticing you to take any trades. This is purely theoretical. But on a trader's perspective, you have to buy and you have to sell. And you as a trader have to decide how much risk you would take on that. Okay, so based on how that price is reacting, you will have to decide, am I going to go for 0.1%? Am I going to go for 1%? Some people take 2% because they are more aggressive. So that is totally up to you. It is your decision. But just take an amount that you are respectfully willing to lose so that it doesn't hurt and you can take on this war. I like to say that trading is a war and you never want to be without bullets. So you don't shoot all your bullets in one fight. Okay, otherwise the rest of the war is going to be pretty hard if you don't have any bullets left. Okay, so this is basically what I'm looking for. Certainly, as the GBP is in highlight right now for today. This is just a pre-London session. So the GBP, we have big news coming up at 1. So be mindful if the market pushes up again on the lower time frames. So on the 4-hour time frames. Here we go. I'm going to delete this. This was good. I'm going to delete. If the market comes back here, okay, with the news, market pushes up and we start to see candles towards the downside. And what we are looking for is something like this. The market is pushing up, 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 and then it breaks that previous high here, this one, higher low. If we break that one and the markets come back, well, guess what? Then you can place a FIB on that level. Good. You place your stop loss above the high. This is your stop loss. And you are going to start selling it. Okay, that's what you expect. For a day trade, that would be the minus 0.27. Good. If you trade it on the daily, as we are doing right now, that would be the start of a potential swing trade. So that means the market goes up. Good. At that point, if we see the structure on the smaller time frames, which is the 1 minute or 5 minute, or you see that first bearish candle on the 15 minute or 30 minute, okay, that first bearish candle, as you can see, where people are starting to show some sell behavior on those critical points, then you can take a run for it. Okay, this here would be your stop loss. This here, this zone would be your stop loss. So it's up to you to say how much risk you are willing to take on that. Okay, so I'm not going to give you guys the exact numbers. You guys, I mean, I'm not a signal service, but what it comes down to is look at points of interest around these levels. Look at points of interest here for that potential setup where we get back to this FIB level, which has been respected here, very nice, within the bigger range. So from that FIB level, we could see a potential drop again to then buy it higher. Okay, at the end of the day, if the dollar is going to keep on printing, it's going to get weaker. Okay, it's going to get weaker. For the euro, this is a historical point of view that I was looking at. Is just, we have here it's the rabbit or the duck. Okay, so this is the range number 1. Good, where we can see that the market has created discount. We have made our first impulse. Okay, right now we are looking for that. So this is a potentiality for the bull. But then again, and that this would be if Biden really, I'm gonna try to say it friendly, if Biden is messing it up, okay, with Powell on the central bank, and people lose their faith in the dollar, and Bitcoin is a very big threat to that. Okay, Bitcoin cryptocurrency is a very big threat to the just normal fiat currencies that we have right now. That potential could be that the dollar could go back towards the lows. Okay, for now, what I expect, and this is still what I have said this to a lot of people, is I'm not giving up on the dollar too fast, and that's for the very simple reason, and this is the last thing I'm going to show before I close it off. On the longer trend, if you just take a look at what has been happening with the dollar, we can see a massive impulse towards the downside, starting from May 88, okay, 1988. That's when this started. Big impulse towards the downside. Look what we have here. We have a big impulse towards the downside. Then we can see a zone of consolidation. We can see a zone of consolidation. Okay, we can see the start of a nice uptrend. Good. We can see the start of a nice uptrend here. We can see that the market makes another impulse towards the downside. We can see that the market makes another impulse towards the downside. And then we can see the market rallying heavily. So this is still historically, okay, historically, this is just a repetition of what has happened already. So I'm not giving up on the dollar too fast. Okay, that means if these lows are being held, I do expect that the market could make another impulse towards the upside, and that would be if the other fiat currencies would just start going down. Okay, and that would be a position trade, which we are not looking at. You have to make the distinction between position trades, between swing trades, between midterm trades, short-term trades, and day trades. Okay, but that's basically what I'm looking at for now. So guys, we have GBP USD. If you guys don't feel comfortable trading the pound when there is news, okay, there is not really a problem. You can go to other pairs. You can go to Euro USD as well. Then you just take the same. Here we go. And that's just based on how you like to trade, but I like to mix it up with fundamentals. Okay, so that means if there is risk off or risk on, for now we are still upholding this, and this is the shorter term. This is the shorter term range that has been respected. So should Euro USD rally, we can hit for this level, and we can potentially hit for this level, which would be the order block that created this entire move towards the downside. So if you say, okay, if GBP USD is rallying, which means the dollar is getting weaker, then you can start aiming for those levels towards the upside. Okay, the reason that I'm taking the pound is because it is in highlight right now, because I believe with the Delta variant, they are not gonna start tapering, which means that I believe they will keep their interest rates low, which could account for a potential drop in the pound after the impulse has happened. Okay, so before the news we see buy, it would be buy the rumor, sell the news. That would be the setup that we could have. Okay, just be mindful that if this thing is running these levels, you need your stop loss in place. Okay, because if this is running your levels, you don't want to be in. There is a very good opportunity that we would just make a rally, okay, a base, and again a rally towards the upside, going towards our next Fibonacci level here, towards the upside, which would just account for, again, as the perfect target, the highs of what we have already created. Okay, but for now, what would be ideal for us, and which will be the only way that I engage in this, is if the market makes another discount back down. Okay, here we can start accumulating, and from that level we can start rally up. That will be the only reason and the only way that I will engage. Okay, guys, thank you very much for listening. I hope you guys had some value, certainly with some of the fundamental aspects about safe havens. In the next sessions, we will talk about what is quantitative easing. We will talk about how does this influence the market. We will talk about how is printing money actually affecting, by example, the prices in the markets. Okay, what is inflation? How does the central bank operate? How can I interpret fundamental numbers within my trading? How can I see that a trend has been changed, etc., etc.? This will all follow in the next sessions, where we will place some some aspects within the day itself trading. So that means that we can find some trading opportunities for that day, or just some swing trading opportunities in general. We will talk about risk management, etc. So I hope you guys have valued this session, and I will see you very, very soon on the next session. I hope you guys have value with Jens, with Sander, with myself, and with Ayosha on the crypto space within the Artist Academy. Thank you for being here, guys, and I will see you soon. Trade safe.